Hey, good morning, everyone. Hope everyone is having a good weekend. So, before we discuss about what are the top five trading indicators, how to use them, let's understand like what are the different types of instruments you can use these indicators. Right? The indicators, irrespective of whether it is stocks or options or futures, crypto, forex, you can use the indicators on any type of instrument. Right? For example, if you're a low risk trader, stocks trading is a good one because there is no theta decay, no implied volatility, right? There is no expiration dates. So you can always, if you're if you're a low risk trader and you want to trade just few minutes a day, then stocks trading is a good one. Then options, if you are a high risk trader, you want to enter, if you have time to enter and exit on time, then options trading can make high reward with a high risk, but you have to enter and exit on time because there is implied volatility, theta decay. So the price moves very dynamically. So you need to be on time for entries and exits. So if you have more time, if you can put more focus in trading, definitely options can make more profits compared to stocks trading. Stocks is low risk, low reward, whereas options comes with high risk and high reward. Then you have crypto trading, right? Bitcoin, Ethereum, or there are a lot of altcoins. This is also, again, the advantage with crypto is it is highly volatile. It can make more profits, but same thing, the volatility is high, high risk and high reward strategy. Futures and commodities, right? Futures means basically your US indices like ES, NQ, RTY, YM. Commodities are like gold, silver, platinum, copper, crude oil, anything you can touch is like commodities, which you cannot touch and feel. They are like indices. So again, this is also for high risk and high reward. You have huge profits you can make, but if you enter and exit on time. Then the last one is forex trading, right? Where you can trade the currencies, right? For example, USD JPY, USD INR. You can trade the currencies using the same indicators. So the indicators which we are going to discuss, we can use any of these type of trading, irrespective, based on your type of rate, based on your portfolio size, based on your risk appetite, based on your time, what you can allocate for trading. You can choose which one, right? Stocks is the lowest risk. Options is high risk, high reward. Crypto is high risk, high reward. Futures and commodities also similar. So based on those factors, or if you are a full-time trader, you can also do all of them, right? It is not that you have to select only one or two. You can also do the combination of all the five. So this is the first thing you all need to understand. So based on your risk profile, you have to select that instrument. The second thing you need to understand is there are mainly four types of trading, right? The first one is called as scalping, right? What do you mean by scalping? Where we enter and exit within sometimes within even seconds, sometimes in few minutes. Where you are entry, that means you are buying and selling within few minutes, or you are shorting, right? That means you are selling first and then buying at a lower price within 2 minutes, 3 minutes, like that. So that is called as scalping. So for scalping, you need more experience. Once you gain more experience, you can do scalping because it will give a lot of opportunities. For every small move, you can make profits, but you need some experience. The second type of trading is called day trading, right? Where you are holding your positions for 30 minutes, 40 minutes, 1 hour, 2 hours, like that. You are not just entering and exiting within seconds or within minutes, but you are holding the position for longer times. So this is the second type of trading. So it doesn't need so much focus as scalping. You can be little more relaxed for day trading. Then swing trading, where you are holding the trades for more than a day. That means you can hold for 3 days, 4 days, 1 week, like that. That is called as swing trading. Then the last one is positional trading, or it is more like investment, where you hold the trades for 1 month, 2 months, 3 months. So if you are a right? A beginner, then positional trading is good for you. That means you are buying and holding the trades for 1 month, 2 months like that, right? Mainly for your long-term accounts, long-term stocks, those things we use positional trading. Whereas you are little experienced, then swing trading is best for you. Then you gain more experience, then you can do day trading. Once you gain more and more experience, you can do scalping. So one is based on your risk profile, second is based on your experience. You can select which type of trading is good for you. So, for example, if we want to do scalping, generally we have to use 1 minute candles, 2 minute candles on the charts. If you want to do day trading, you can use anything like 5 minutes, 10 minutes, 15 minutes time frames on the charts, right? I'll show you with different examples so you will understand better. Then the third type is swing trading, where you can use time frame like 1 hour candle. That means every candle represents 1 hour of price action or what happened in that 1 hour. How much it went up, how much it went down, what is the open, what is the close, what is the high, what is the low in that 1 hour. So we mainly go with 1 hour candles if you want to do swing trading. If you want to do positional trading, that means you want to hold your trades for few weeks or few months. That is where you can use daily or weekly candles. That so you are looking at 1 week, right, or one complete day, right, 1 2 days of price action, and then based on that you are taking a buy signal or sell signal based on the buy and sell signals from the indicator. So again, if you are a low risk, for example, you want to buy stocks, then positional trading is best, right? Because you cannot do scalping with stocks, but you want to do futures. Scalping is the best one, right? Or scalping or day trading is best for futures. In the same way, if you want to do cryptos, scalping and day trading is best. So, like that. So, one is understand what are the different types of instruments which you can use. Second is understand what type of trading methodology suits you best. Right? Once you understand these things, then you will be in a much better position. Because if you are completely new trader, you try to do scalping, you might be entering and exiting at a wrong time. Right? You may not be. You need to be very fast in your decision making in buying and closing the positions, exiting the positions. You have to be or if it is going against your direction, you have to quickly take the stop loss. So you have to think very fast. You have to right use your buy sell button, stop loss buttons very fast. So if you are completely new trader, you try to do scalping, you may be doing some mistakes and you may be taking losses. So that's why you start with uh, day trading or swing positional before you get into scalping. So your experience is will help you. So if you because positional trading you don't have lot of tension, right? You don't need to quickly open and quickly exit. At any point of the day, you can open a trade, and after a few weeks, you can close the trade. So I hope is everyone clear with the first two slides? You can put your comments in the chat. Is everyone? So that is where most of the new traders, right? They don't without realizing which is good one for them. If you are a low risk trader, you try to do options. Suddenly you see some 1 2 red candles, you get panic. So that's where these two things are very important for each of you to understand. Uh, right? What are the instruments we can trade and what types of trading we can do. So now let me quickly show you with an example so that you will understand what is right, what is positional trading or what is scalping, what is day trading. And then I'll also show you with some examples where you can understand. So let me show you some stock like. So first thing is Let me explain you one indicator called price pulse indicator. This price pulse indicator is more like a market maker indicator that will tell like where the big market players are buying, big market players are selling. So for example, you are more of a positional trader. That means you want to buy stocks and hold them for 1 month, 2 months like that. So what we do here, we go here. So you have different time frames here: 1 minute, 2 minute, 3 minute, 5 minute, 1 hour, 4 hours, daily, weekly, monthly, like this. So you can even use weekly, monthly, but you have to, if you are planning to hold the trades for 2, 3 years, 4 years like that, you can use monthly. If you want to hold for a few weeks, right, like 5, 6 months, 7 months like that, you can use weekly. If you want to hold for a few days, maybe 15 days, 20 days, 30 days, you can use daily. So I hope you all understand. So for example, if I want to do positional trading or do hold the trades for more than a month or so, then we use daily time frame. For example, if you see here, right, Okta, now you are at a point where there are a lot of big companies are trying to buy at somewhere this point. That means whenever it was, so generally if you see the candle color in the red color, that means it is bearish, right? All these are bearish. That means price is dropping here. It came all the way down. Now you can see that there are big companies who want to buy. So don't buy assuming that it will reverse. You're right. Wait for a green candle now. If you see that price is reversing, maybe Monday or Tuesday, you see that price started going up. Then you can start. You can buy the Okta stocks, and you can hold for 1, 2 months. Then maybe if you are buying it around $90 in maybe 3 months, 6 months, it may go back to 130, $140. So that is where that is called as a positional trading. So you can take trade Monday, Tuesday, Wednesday, right? Whenever you see a green candle, it is draw, right? It went all the way up, went to nearly 127. From 127, it came all the way to the bottom, so, right? Maybe in next 3, 4 days, we'll see a reversal, right? Whether it can happen tomorrow or day after. So at any point of time, you can take a trade and then you hold it for 2, 3 months. Then if you are investing some 100 stocks, then maybe in 2, 3 months you will make 20%, 30%. So that is called as a positional trading, where you look at the daily time frame, you see like where you have big buyers are buying, you wait for a you wait for a reversal, because if there are more sellers, it may come to this zone. If still there are more sellers, it may come here. If there are still more sellers, it may come here. But when you see a green candle, that is where the buyers are again trying to buy it, and then it will start reverse. So whenever, so here it is a strong sell, here it is a sell, this is a buy. Whenever you see a buy, that is where you will go and take a long position, and you can hold the trade for long time. So you can buy the stocks and you can hold the stocks for 1, 2 months without any tension. You can make 20, 30% on your uh, in your portfolio, in the stocks portfolio, even though it may drop little more, right? It Okta is a good company. So even if it drops little more after you buying also, maybe you will have a stop loss at 10%, right? Whenever you see a PP buy, right, price pulse buy, you will take a long position. And then if, for example, if you're buying at $90, right, around $87, then you will have stop loss at around $80, right? Here, because there are more buyers here. So let us say it came here, started going up, then you will buy stocks, and then you will have your stop loss. That means suddenly if there is any major bad news about the company, you see, right, okay, here I see you have more buyers. You can put your stop loss here, and your target will be somewhere here, right? Whatever is the previous resistance, 127, will be your target. That means your risk is some $5, $6 on each stock, but your reward is around $30, $40 on each stock. So you don't need to enter and exit in a hurry, right? So if you are a low risk trader and you don't have a lot of time, this is where you will use daily time frame, and you will use the big buy block, right? These are big buy orders, big companies, big JP Morgan or Bank of America, BlackRock, all these Wells Fargo, they are trying to buy the stocks around this price. So you also want to buy with the big companies because those are the companies who will win 90% of the time. Whereas as retail traders, we wait for price to go all the way up and we buy at the top. Whereas big companies will buy at the bottom, sell at the top. So you want to follow the market makers. You want to follow the big whales who will win 90% of the time. So this price pulse is our number one indicator, which will help you to know where the big companies are buying, big companies are selling. Based on that, we can take the trades. If you are a long-term trader, positional trader, or a swing trader, you can use daily. Or, for example, you want to hold the trade only for 3 4 days. You don't want to hold for 10 weeks or 8 weeks. Then you can use 1 hour time frame. For example, you see now you are in a 1 hour time frame. You see that you are close to a discount zone, right? Discount means the stock is at a discount now, right? We all like discounts. We all like deals. That means you are getting the same stock was getting sold at around $100 on 9th July, whereas today it is at $91. Maybe tomorrow or day after tomorrow, it may go to right around $90, and then again it will reverse. So once you see, right, you can put a alert here. You can say that, oh, whenever Okta comes to this price, add alert on Okta at 90.51. Or you can create an alert whenever I get a buy signal, let me send me a notification. And then once price comes here and then it starts moving up, right? Next 2 to 3 days, it may move from $90. Again, you see where the big sellers are. You see that around $96 there are big sellers. So it will come to this point and again go up. So maybe next 3 4 days you will make $5 to $6 on each stock. So that is how, right? You are not again waiting for 127. To go to 127, it may take 2 months, 3 months or more. But from $90 to $96, it may take only 3 to 4 days. So whenever it comes here and you see a green candle in 1 hour, that means tomorrow morning it may drop from 8:30 to 9:30, it may drop one more, and then it will touch this. This is where big companies are trying to buy. So once you see a green candle, you can buy the stock and then you can hold the stock until here. So so that means you are investing around $90 on each stock to make around $6. Otherwise, what you can do, once price comes here, starts moving up, then you can buy Okta calls, Okta 90 call. Then you can make profit. Or you can do bull put spreads. Once price comes here, you can do some bull puts around this area or around this area. If price stays above this, then you will make 100% of those credits. That means you are buying a right, you are selling a put, you sell some $89 put, you buy some 80, right, you sell 89 put and you buy some 85 put or something. Then if price stays above 89, then all that money is yours. Because there are big companies who are trying to buy here, then the chance is very high for price to go up from this level. So like that you can buy the stocks or you can do the options, and most of the time you'll make nice gains because you are using a proper strategy. You are buying as the big companies are doing. So that is how, right? Or let us say you want to day trade. You don't want to even hold for 3 4 days, 5 days. You want to day trade. Then you will go to 5 minutes time frame. And you see that in 5 minutes where the big companies are buying, right? Now you are at a discount zone in 5 minutes. So for example, if you see that this started going up, then immediately you can do a buy. It may go all the way somewhere here to the next resistance, and then it may drop. So within few minutes, you can open the trade, close the trade. But here you are only looking for some $1 price move, right? In 1 hour, you are looking for from $90 to around this price to this price is your target. But you have to hold for 4 5 days. Whereas in daily, you are looking for right somewhere from this point around, right, it will touch this around $88, right? That is where it came last time. It will come here, then again it will start moving up. Then you are looking for minimum $10 to $12 profit, right? If it breaks this, then it will go all the way to around $127. So you are looking for bigger profits, but you have to hold for more number of days. In 1 hour, you are looking for $5 6 profit. You will hold for 5 6 days. Whereas in 5 minutes, you are only looking for $1 move or something. You will just open the trade, close the trade on the same day. You can do stocks, you can do options. It is up to you. But basically, this price pulse indicator will tell us based on the time frame. It will show where the big companies are buying, big companies are selling. Based on that, you can take the trades. If you have a price pulse, so as long as, let us say, right, for example, right, you can see all the live videos we do every day. So, for example, right, on Friday, we saw that there were some nice buy orders here. Right, immediately we did the bull puts Friday morning. Then price went up. We kept all 100% with that daily income trade. Then it went all the way to the top. And then we saw that there are big sell order blocks. Then we took the bear calls. We made 100% with the bear call spreads. So, like that, you can see where the big companies are buying or big companies are selling. Based on that, either you can do calls or you can do bull puts. If you see big buy order blocks, you can do the long calls or you can do the bull. So if you buy the calls and if it stays choppy, you have a risk, right? But if you buy bull puts and even if it stays choppy also, you'll make profits. If you do puts, if it immediately drops, you'll make nice profits. But if you buy puts, suddenly it goes up, goes down, goes up, goes down. If it keeps moving up and down, you may lose your premiums. But if you do bear calls, as long as price stays below this resistance, right? We saw that there was at 60 to 70, we had a huge sell block. So if you do a bear call, and even if price stays up and down also, as long as it stays below this resistance, you will keep 100% of that money. So that is the again, right? Your risk is low, but your reward also will be low with the spreads because you are also selling, you are also buying. Whereas with the puts, you are just buying, and if price drops, you will make big reward. But if it stays choppy, you will lose. So yeah, but basically, right, what we need to understand is using the price pulse indicator based on what type of investor you are. If you are a low risk trader or you don't have time to enter and exit on time, then daily is the best. Otherwise, hourly is next best. Otherwise, you can use if you can focus, if you can take the trades quickly, enter and exit on time, then 5 minutes the scalping will give you more profits because you can open on the same day, you can close on the same day, you will make more profits. So this is the first indicator called price pulse indicator, which basically works based on the market maker models, right? Based on what the big companies are doing. If the big companies are buying or big companies are selling, we will go according to that. So if you are at a discount zone, that means generally big companies buy at a discount. Big companies generally sell close to the premium zone. So that means the 60 to 90 is a very, very strong resistance. And this is your discount zone is right where it can go up. So for example, tomorrow morning, right, let us say market opens at discount zone. Then there is a high possibility for SPX to go up. Or let us say by tomorrow morning, we see SPX at somewhere around premium zone. That means we can do the bear call spread and we can keep most of that money. If price opens somewhere around discount zone, we can do bull put spreads. We can keep that money. So like that, first 15, 20 minutes, we don't take any trades and we see what is happening, where the big buyers are buying, where the big sellers are selling. Based on that, we can take the trades. So there is one major alert we can use in price pulse. One is you have something called you can do buy and sell, right? You have PP buy, PP sell. That is one important indicator we can use. So whenever there is a buy signal or sell signal, we will receive a notification. Or there is one more called bullish and bearish order block. That means whenever this goes and touches a big order block, immediately it will send you a notification that price is close to a bullish or bearish order block. That means, for example, you go here daily and you set an alert on bullish or bearish order block. It goes and touch a big bearish order block. You will receive a notification that there is a big sell block here or there is a big buy block here, like that. Then immediately there is a possibility for a reversal, right? If it is a buy block, price can go up, or if there is a sell block, price can go down. Like that, those alerts will help you. One is the buy sell signals. Second is whenever you have a big sell block, you will receive a notification that, oh, there is lot of big companies are selling here. Then immediately you go do the bear call spreads or you buy the puts. Immediate, right? It touched the sell block. There was a huge 20, 30 point, 20 point drop on SPX. Then again it touched the bottom, did a pullback. Again it touched the sell block here. So this is a major sell block. So if you see that full rectangle, that is a major cell block. These are small cell blocks. It went all the way down, again went up, touched this cell block, again it dropped. So that cell block alert will help you to take the trades. So you can use it on ES, right? Same thing happened. ES, it went and touched the cell block, right? You have a major cell block here. It touched the cell block, came all the way down, and then did a pullback, again touched it, again came all the way down, again it went, touched the small cell block, again dropped, touched the small cell block, again dropped. So these are the fair value gaps, or you can call them as small cell blocks. This is the major cell block. So whenever price touch that cell block, the price will again reverse. The same way, these are like your buy block. So this is the major buy block, right? If you see a big rectangle, that is a major buy block. These small rectangles are small buy blocks. So price touched this buy block, went up. Again touched it, went up. Again it went up, touched this, again it went up. So again it came down, touched the buy block, went up. So you should try to buy close to these buy blocks, right? Either you buy here, or you buy here, or you buy here, right? You have to just wait for those to buy. To go long, you wait for the buy blocks. Or if you want to sell, you take the trade close to the sell block, or you buy the option puts at the sell block. You do the bear calls at the sell block, right? Whether you do with ES, you do with SPY, you do with QQQ, we should try to do the shorting close to the sell blocks. You try to buy close to the buy blocks. So you have major buy block and you have small buy block. So this is a major buy block. This is a major sell block. This is a small sell block. This is a small sell block. So that's how, right? If you want to scalp or if you want to day trade, you try to buy at these points. You try to buy at this point, try to buy at this point. And whenever it goes all the way to the top, right? Price will never go in one direction. Even though it is bullish, it will go some five, right? It went three candles up, two candles down, three, four candles up, one candle down. Again, some three, four candles down. Again, four, five candles up, three candles down. So it will create higher highs, higher lows, and keep going up all the way to the premium zone. Again, then it will create lower lows, lower highs. Then it will keep dropping. So we need to, if you want to be successful, make, right? You saw many success stories like Ankit and many more. If you want to be successful, you should not take trade wherever you want, right? Try to, especially you don't want to scalp, right? For example, I see that, oh, it is going up, I take trade, I wait for a pullback, again I take a trade, again I see wait for a pullback. So because I have more experience, I do a lot of scalping. But if you cannot scalp quickly, then you wait for this buy block or you wait for the sell block. And then you can hold your trade for 40 minutes, 1 hour, like that. So either you take the sell signals at the sell blocks or you take the buy signals at the buy blocks. That is where you can hold the trades for longer time. You can go here,
and you can take it, right? You can put your stop loss somewhere below that sell buy block, and your your target can be much higher. Your risk reward will be much more bigger when you buy at a buy block and when you sell at a sell block. That is right. If you want, right, because especially for the prop firms, we have to close the trades on the same day. So that's why we cannot go with 1 hour or daily time frames. Right? We use 5 minutes time frame. Or if you are more experienced trader, you wait for a buy signal. And then now we can go to 1 minute or 2 minutes, and then you can take the trades in smaller time frame. So if 5 minutes I got a buy signal, right? Let us say already on Thursday night it dropped so much because of that Canada tariff news, right? And then we got a buy signal. Then it went up, two, three candles, it will go up, then it will be there will be a pullback. Again, some two, three candles went up, again it came to the price. This as long as this line is blue, right? It went up, we'll make some $200. Again, it will try to come to this price pulse line. Again, it went up. Again, it will come to the price pulse line. Again, it went up. So, like that, you will see some two, three green candles, some two red candles, two, three green candles, some two red candles, two, three green, two red. Like that, as long as this is line is blue, you can keep taking the long point. Wait for a red candle. Again, you see a green candle, you go long. Wait for a red, you see a green, go long. Wait for a red, you see green, you go long. As long as this line is blue, you can keep doing that. Again, now this line is red. You can again, right, whenever you see a green candle and red candle, you go short. Green candle, red candle, you go short. Green and red, you go short. Like that, you can keep scalping. So, but you can start with 5 minutes time frame, right? Especially for prop firms. And when you see a major buy block, you go long. Where you see a major price pulse sell or the price pulse sell you got at a sell block, you can take the shorts. So that is about the first indicator, price pulse indicator, which is very, very useful. Whether you want to do cryptos or you want to do Bitcoin, you want to do currencies, forex, whatever it is, you can use the indicator. The concept is same. You want to sell close to the premium zone. You want to buy close to the discount zone. Whenever there is a discount zone, right? You want to buy at the bottom. You want to sell at the top. So as long as this line is blue, you want to be long side. Whenever this line turns red, your candle starts dropping below that, you can take the short trades. So that is the price pulse indicator. Then let's go to the next one, which is called the T5 indicator. So why we need to use multiple indicators? Because right, whenever you want to take a decision, right, any decision, you will not just depend, right? If you want to find out about some good car you want to buy, you will check with some three, four friends, right? You will not just go with one friend, and if he tells Tesla is a good car, you will not just go ahead and buy, right? You may check with three, four friends, or you want to buy a house, you want to buy a home. Then you will check with multiple friends who are living in that city and find out which is the best community. In the same way, in trading also, we look at confluence between multiple indicators. If price pulse is telling it will go down, if T5 is telling it will go down, we will use the confluence. So now you got like what is this price pulse indicator, right? Price pulse is basically you try to buy close to the discount, you try to sell close to the premium zone. Whatever is the time frame, whether you use daily or 1 hour or 5 minutes, our buy should be always close to the bottom, our sell should be always close to the premium. That is your core fundamental rule. Then for T5, right? For example, here it is a discount. T5, right? This is like if the price is at the bottom, that means it is oversold. If the price is at top, that means it is overbought. For example, in price pulse, it came all the way to the discount, right? You can see that there it is close to a buy block, It is at a discount zone and there is a nice green rectangle here. That means some big companies are buying here. Price came here. In the same way, T5 also price came all the way to the bottom. So that is where price pulse is telling it will go up. P5 is also telling it will go up. You got a green dot here. That means buyers took the control. So this is the base price. The buyers are showing interest above the base price. That means there is a high possibility for price to go up. Now price went all the way to the top. Now it started dropping. So if price in price pulse, if it is at a premium zone, and here you see it started dropping, if it is like this, then you should not take the trade. If they are very closely connected, but you should wait for a drop, right? Because here it is consolidating. Buyers and sellers are fighting with each other. But here the drop started. So this is where if your price is also at premium zone and T5 is also dropping, that is where you have a confluence between price pulse and T5. That is where you can take the sell side trades, you can take the short trades, you can do the puts, you can do the bear calls, right? If price is going like this, you can buy the calls, you can do the bull puts, you can buy the stock, you can buy the cryptocurrencies like that. So you are not just depending on whether price pulse is a discount or not. You are also now your confidence is more because this price pulse is like your friend, right? It is telling it will go up. It came, right? It went all the, you got a sell signal. It came, touched this zone, and now you see there is a big buy block here, right? If it is something in green color, that is a buy block. Here, there is a small buy block. There is a small buy block. If something is in red, that is a sell block. So price, right? You had a price pulse sell. It came all the way down, touched the buy block, and started going. You can see now green candles. Now you can see T5 started going up. So your price pulse is telling you can go, you can buy here. It went all the way up. Your T5 also started telling, right? Price came all the way down, started going up. So now you got a confluence between both the indicators. So that is how now it is not just one friend who is telling you to buy it. Now you have two friends who are telling that, okay, it will go up. So now your confidence level will be much more. So now this is price pulse indicator and this is T5 indicator. Now we can use one more example or the third indicator, which is called as level manager, or let me take you to futures level manager. So I'm explaining about one by one indicator so you understand how to use them so that you can trade stocks, options, futures, currencies, whatever you want. So price pulse can be used for anything, T5 can be used for anything. Whereas this futures level manager, mainly if you want to take advantage of prop firms, you want to do the prop firm trading, then this futures level manager indicator is very, very useful. So every day what we do is based on different factors, based on the support, resistance, how the overall market is. We give you levels, right? The major support and resistance levels for the day. You have to just paste those levels here, right? For all different major future tickers like Nasdaq, NQES, gold, Russell, Dow Jones, crude oil, gold, like right? You will paste all those levels. Whenever you paste those levels, immediately it will show you something like magnetic area. That means this is where you have equal number of buyers and equal number of sellers, right? This is like, it is like a baseline. This is your resistance 1. This is your resistance 2, resistance 3, resistance 4. So if generally when market is below this, that means overall there is a bearish pressure. There is market is, you can say that overall market is bearish, right? If price is below the magnetic area, whenever market opens, right, then generally it will be So, for example, right, market on Thursday, there was a huge drop. Even before the market opened, there was a big drop. So it was bearish, but right, nothing will keep going down. So nearly it came to support one, support two, support three. It came to nearly support six, right? That means it broke six levels down from the magnetic area. So when market opened, it was somewhere right after around 9 o'clock. It came to nearly six levels down. So this is the baseline. Whereas because of the Canada tariff news, it dropped all the way to this level. So that means it dropped so much, right? On Thursday, it was somewhere trading somewhere here. Whereas because of that news, it dropped so much. When you see, right, just before one day, you are buying at 63.40. Today, you are getting at 62.70 or something. So then definitely some people will be interested to buy that. So we get something called as a swing buy, scalping buy, right? Or if you want low risk, what you can do, you can even avoid the buy signals and you can just wait for the swing sell because it is below the magnetic area, right? Or you want to take both the sides, then what we can do, whenever you see a swing buy, right? This is where you get the bull power, right? It is telling that there are nearly 67 buyers out of 100 who are trying to buy here. And so you got a swing buy. That means you can hold the trade for 40 minutes, 1 hour like that. And you got a scalping buy. So at the same time, right? So now this features level is telling that. So again, if you see the right our Friday live session recording, we took the bull puts here, right? Because our price pulse gave an indication that we are at a major buy block where the big companies are buying. You are at a discount zone. Then your T5, right? Your T5 was came somewhere to the bottom and started bouncing up. Buyers took the control here. Right? It did not come all the way to the bottom, but it came nearly to 50% and then started going up. Then your futures level manager gave a swing buy and scalp. So these are like scalping signals. That means only for few minutes you can hold the trade. Whereas if you get a swing buy and also a scalping buy, you can hold the trade for nearly 1 hour, 2 hours like that. So here we got a swing buy and scalping buy because price dropped so much compared to the yesterday's close. Then people thought like, oh, it is a good price. Yesterday we were paying $100 more. Today we are getting at a discount. They started buying. Then it went up, up, up. Then we did the bull puts. We did the SPY bull puts, QQQ or SPX bull puts. Then it went all the way up. And then in last 1 hour, we got a swing sell. We know that overall it is below magnetic area. And we got a swing sell. Then we did the bear calls here. We took the bear calls, we took the shorts on ES and NQ, and then it dropped all the way again. So what we need to do is just use the swing buy and scalping buy to go long, or whenever we get a swing sell and scalping sell, go short. You can do bear calls, you can make money with SPX, you can make money with SPY, you can make money with QQQ. Because ES and SPX are same. And ES, if SPY drops, QQQ also drops. So if you go and check, right, for example, SPY, you will see that SPY also same thing happened, right? On morning it went up, then in the last 1 hour it dropped. If you see NQ, you will see the same thing, right? Morning we got a swing buy, scalping buy, it went all the way up. Then we got a scalping sell. So we got NDX bear calls. We got QQQ bear calls. When it started dropping, so then it came all the way down. So right, you can see that it came right in the morning. It came all the way to nearly three levels down, went up, touched the magnetic area, then started dropping. So generally, whenever this magnetic area will act as a strong resistance, right? That area acts like a magnet. Whenever it price opens below the magnetic area, if it goes so much down, it will try to go till that area and again it will drop. So this level we can use. So one is you got the swing cell, scalping cell. So and you also see the bear power. If it is above 60, that is a good opportunity. We can take the shots. So, and you get a swing buy and a scalping buy. So now at the same time, right? You are not just depending on, for example, you saw this one. Immediately you just hide this and you go and see price pulse. So okay, I'm also at a buy block, buy order block. That's a good one. Okay, T5 also gave a buy signal. Okay, that's a good opportunity. Like that, you are not just depending on one indicator. Now you have two, three different indicators telling you the same story. Then your confidence will be much more higher. So you got a swing buy, scalping buy. It went up, came down. It went up, came down. So like that, again you got a swing sell and scalping sell. It came all the way down, then did a small pullback. Again, it came all the way down, we'll do a small pullback. So if you have a swing sell and scalping sell, either you can take the trade and hold it, right, the shorts until it touches a buy zone, or you can, whenever it comes all the way down, you take the profits. Again, it will go a little bit up. Again, you see a sell signal, you take a short. Again, it came all the way down, you close your short. In the same way, if you have a swing buy and scalping buy, it goes all the way up, you take the profit. Again, it came all the way down. Now you got a scalping buy. Again, you take a long. Again, it came all the way down. You take a buy. So whenever you have a swing buy, you focus on the scalping buy signals. Whenever you have a swing sell, you focus on the scalping sell signals. So whenever it comes to the bottom of the band, you close your short trade. Otherwise, especially if you have prop accounts, you have intraday accounts, you had a huge profit here. Suddenly it went up, right? Whenever price or you see two, three candles down, you take the profits, right? Again, it went, did a pullback. Again, it came all the way down. So you can focus on the sell signal. When you wait for a swing sell, scalping sell, and then you take the trade, make profits, wait. Whenever it comes all the way to the bottom of the band, again wait for the next sell signal. Again, it came to the bottom of the band, wait for the next signal. Like that, you can do the trade. Same thing whether you do stocks. So futures level is mainly for all the future stickers. You can do any future sticker using ES or NQ or GC where you have huge volume every day. You will see all these levels. So based on the levels, if it is below magnetic area, that means mainly we are bearish. If it is above magnetic area, mainly we are bullish. So if you have a swing buy, you focus on the scalping buy signals. If you have a swing sell, focus on the scalping sell signals. Or if you get a swing sell, confidently you can take a bear call spread above that. If you have a swing buy, you can confidently take the bull put spreads. Then, so that's where we did this. Then 100% of the time, the price will stay between this and these zones. Right? On the day whenever price opened, we got a swing buy, scalping buy. Then we made profits with the bull put spreads. We made 100% profits with the bear call spreads. So that is about futures level manager. Same thing we do with stocks level manager. So again, just like we put all the levels for futures, in the same way we do all the put all the levels for the stocks and the different indices like NDX, SPX, QQQ, SPY, Nvidia, Tesla, Amazon, Meta, Google, Microsoft, all those major ones. So again, right, when Meta opened, right, it was below the magnetic area. It came all the way down, you got a swing buy, then went little bit up. It touched the sell zone and then again started dropping. So So basically, whenever you get a swing buy, you can do the bull puts, or whenever you get a swing sell, you can do the bear calls. Especially if it is on a Friday, you can do the zero DTE, and you can keep money on all those bear call spreads. So, so one is price pulse, one is T5, futures level, stocks level, right? These are the four indicators. Then let me show you one more indicator called T55. So this T55 indicator, so let me repeat one more time. So mainly your price pulse is based on your premium zone, discount zone. If you are at a buy block and it started going up, we can go long. If you are at a premium zone, you have sell blocks, you can do the sell. Then T5, if you are at the top, so if you are at the bottom, it will go up. If you are at the top, it will go down. Then your futures level manager, based on if you are above the futures level manager, is mainly for future tickers. Generally, if you get the swing buy, scalping buy, we go long. When you get the swing sell, scalping sell, we go short. So you wait for those, right? Wait for, because you have so many tickers. So one or other will get a swing buy and scalping buy, or you get a swing sell and scalping sell. We wait for those levels, and especially if it is below magnetic area, swing sell, scalping sell is the best opportunity, right? Because it dropped so much already, so we got a swing buy. In the same way, if you are above the magnetic area, if you get a swing buy, that will be generally a very good opportunity. Unless it goes all the way to 3, 4 levels up, then there might be a reversal. In the same way, here it went all the way 6, 7 levels down, then we got a buy opportunity. Again, it went up close to the magnetic area, and then we got a drop. In the same way, NQ. It dropped nearly 3, 4 levels down, and then we got a buy signal. Again, it went to the magnetic area, and again, we got a sell signal. So, if you wait for the swing buy, scalping buy, or swing sell, scalping sell, we'll make nice profits. So, on normal days, if there is no major news or no major event, right? For example, let us say there is no tweet from Trump, or there are no major events on the day. So generally, price will stay within these levels. That means this, right? This is the resistance 3, potential reversal for the day, and this is the potential reverse on range days, right? If there is no major news, no major event on the day, it will maximum come till this level, go up, or maximum go till this level and go down again to the magnetic area. If there is a major event, it may go all the way down to S6 or S7, or it may go all the way to R6 resistance 6 or resistance level. Otherwise, just it will move in a small range. That means if there is no news on the day, if it comes to, right, for example, let us say tomorrow, if there is no major news, it may come to the S3 and again go back to the magnetic area, right? That means whenever it comes here, it will go to the magnetic again it will drop. Or if it is bullish, it will go from here to this area and again it will drop. So on range days, this is a potential reversal point. But if there is a major event, a major news, major tweet from Trump, then it may go much higher. If there is a positive news, it will go much higher. If there is a major negative news, right, for example, today again he tweeted on Mexico and other, right, European Union country, he want to put 30, 35% tariff on them. Then it may come all the way to support 7 or support 8. If there is any news, it will be much more bigger moves, right? That will be very huge moves on those days. If it is a normal day without any major news, it will just move between these area. That means whenever it comes here, you can go long, it will go back to the magnetic. Or whenever it comes here, right, from magnetic area, it went all the way up, then it will come to the magnetic area again. So that's how this futures level manager on you have to understand whether it is a range day or it is a major event today. If it is a major event today, it will it will drop so much big, and then it will go back to magnetic area, and again it will drop. If it is a normal day, a range day, just it will stay in a small range, come to here, go back here, come back here, like that, or go to here, come back here, like that. It will. So whenever it, for example, if it is a range day, if it goes here, you will get a swing sell signal here. You will get a scalp sell signal here. You can do bear call spreads. In the same way, it will come here and it will start going up. You can do bull put spreads here, like that. That's it. We need to understand. If you understand whether it's a range day or a event day, major news day, then you can easily trade futures or stocks on those days. So these two are similar. The logic is same. Only thing is here we use for all the stocks, whereas here we use for all the futures. Right? That's the only difference. Mainly we wait for swing buy, scalping buy, or swing sell, scalping sell. Again, if you want to be right, you want to trade in personal accounts. For example, if you see in daily, right? For example, in April we got a swing buy, right? Around April 10th, we got a swing buy, scalping buy. Again, now we have a swing sell. Maybe tomorrow we may get a scalping sell. Then there might be a drop, right? Minimum we can expect some 100, 200 point drop. So, right, in daily, right, for example, if you have taken a trade here, then you will wait all the way until it goes up. Again, it came down. Again, it went all the way up. Now you got a swing sell in daily time frame. That means you, if you are a long-term investor, long-term trader, we can take a short trade with some stop loss above here. There might be a 200-300 point drop in next 1 2 weeks, right? It may come all the way to 6,000. So like that, right? If you want to trade in prop accounts, we use smaller time frame. If you want to trade in right your personal accounts, you can use higher time frame. Whenever you get a swing buy, it went all the way up. Now you got a swing sell, right? Because again the tariff news, all these things are coming, so there might be a big drop. We may see a drop minimum till this level, 57.90. If it breaks this level, then it may come much further. But yeah, there are high chances for a 200 to 300 point drop in the next 1 to 2 weeks. So like that, you can right you can do calls here, you can do bull puts here, you can do bear calls here, right? For next 1 month expiry, you don't take for tomorrow's expiry, but you can take, right? For example, August expiry, you can buy the puts, or September expiry, you can do the bear calls. So if price starts dropping, then you can keep all that money. So you don't need to quickly enter and exit the trades, right? Because you are taking in a daily, right, you have to hold the trade for 1 month or so to make profits. So like that, you use the futures level and stocks level. Then the last one, right? I told you that we can make 80 to 85% with the uh, major earnings. So, for example, we have all these earnings in the next week. So let us, right? We have to use daily time frame for the earnings. So, for example, if you see this particular ES, right? ES is at the top now. That means it is already over the resistance, and you can see all the dots. There might be a big drop is coming with ES in next 1 to 2 weeks. We will see a major drop. Now we have EQBK earnings tomorrow after hours. You can see EQBK is at the top now, right? Generally, with earnings, there will be a major drop, right? Or there will be a major bounce. So if you see EQBK, T55 is telling that price is already at the top, right? Now let us go to, okay, T55 is telling price is at the top. That means the chances for drop are much more higher, right? Okay, let's hide this one. Now let's go to T5 and check. So in T5 also price went all the way to the top. So T5 is also telling that it is overbought. So T5, so now T55 is telling EQBK will drop. T5 is also telling EQBK will drop. Now let's go and check price pulse. So what do you see in price pulse? You see that big companies want to sell this stock, right? Nearly 192,000. You have a huge sell block here, right? That means the price can drop from here. So price pulse is telling it will drop. Now if I go to RC level manager, right? It is telling that you are at a swing, right? You got a swing sell. There is lot of bear power close to 59. So now your T5 is telling it is overbought. Your T55 is telling it is overbought. It went all the way from the bottom. It went to the resistance. You can see the dots. At any point of time, there can be a huge drop. Your level manager is telling price is at a right. It came all right. Swing buy was somewhere here at $34, 14th April. Now it went all the way to $45. From 34 to 45 is nearly 35% up. So with earnings, again, it cannot move another 10, $15 up. There is a high potential for a price to drop all the way to this 38.5. So if we do a bear call spread here and collect some premiums, there is a high 90% chance we can keep the money, right? All that premiums. You can buy the puts. If it drops big, then you will make huge money. But if you do the bear calls here, or right, you sell 46 call, you buy 48 call, or you sell 46 and buy 49. Then if it stays below 46, if it stays choppy also you'll make money. If it goes little bit up also you'll make money. If it drops you'll make money. So the chances are very, very high to keep all that money. So like that, right? You can use for earnings where you don't need to keep watching the charts, right? Just you take trade for 5 minutes and wait for the next day. Once earnings are done, 80 to 85% of the time we will make profits. Right? Let us look some other example. So what do you think can possible with SLP? Right? Maybe this one we have. So SLP, right? We level manager is telling it came all the way down, right? You got a swing sell here at $38. Now you got a swing buy $16. So do you think the earnings can be positive or so again, we are not just depending on one indicator. Okay, level manager is telling it can go up. Now let's go and check the other one. Right. So now let's go and look at T5. T5 came all the way to the bottom. Right. It is at the bottom. Right. That means it is oversold. Okay. T5 is telling it may go up. Now let's go to T55. It came all the way to the at the bottom. You can see the dots. That means there is a high possibility for price to bounce back. If you see the price pulse, right? So you see that there are big companies are ready to buy the stock here. Nearly 40.3 thousand buy orders here, 59,000 buy orders here. So if we do a bull put spread here, your chance of risk is very, very less because already it got oversold. There is a high possibility for price to go up. So like that, you are not just using one indicator, you are using a combination of multiple indicators and we are taking a yeah, bull puts or bear calls, or you can buy the calls. If you are a high risk trader, you can buy the call. Or you want to take low risk, then just you go and do a bull put below this. So there is a high possibility this SLP will go up after that earnings. So like that, we can do. We can make 80% of the time. We can make money with earnings trades. So like that, this T55 is mainly useful for earnings opportunities. Whenever something is at the top, we can do the bear calls. When something is below the support, we can do the bull puts. Then we can win 8 to 9 out of every 10 trades. In the same way, if something is at the top, you can do the bear call spreads. It will come all the way down. ES is at the top now. SPX is at the top now. So that's where we got the bear calls for next week, next Friday. So in next 2 3 days, if we see a drop, you can keep all that money, right? If you see NQ is at the top. So we may see some big drop in the coming week, right? You can see all the whenever if something is at the bottom, it will go all the way up. If something is at the top, it will come all the way down. So now we are right. We may get a big big drop in tomorrow, day after tomorrow. Most probably, right, because of the Mexico and the EU news today. Also, we may see a major gap down with the ES and Q. So like that, right? Crude oil came all the way to the bottom. So now crude oil started going up. You can do the pull puts. You can go long on a crude oil, right? GC came all the way to the bottom, started going up. Here it went all the way to the top, started dropping. So whenever this goes to the top, you see a dot, you take a shot. Whenever it comes to the bottom, if you see a dot, it is much better opportunity, right? You can even do the same thing in 5 minutes. In 5 minutes also, if it goes all the way to the top, you can take a shot. If it goes all the way to the bottom, you go long like that. So there is one more, right? The last indicator called biweekly spreads, right? For example, the now you tell me, right? Where do you think Monster will drop? Do you think Monster can drop further, or do you think Monster will start going up tomorrow? Right, MNST. We got a vertical spread alert. So it went all the way to the premium zone. This went all the way to the top. It started dropping. Here you can see there are huge sell orders, nearly 5.3 million sell block. Then it started dropping. So there is a high possibility for it to go all the way to $55 or it can even drop to $54. So now if you do a bear call spread above this or above this, right? Here you have a cell block, here you have a cell block, here you have a cell block, here you have a huge cell block. Then minimum is it will drop all the way till here. Tomorrow we can buy the puts or we can do a bear call spread. You can make all the minimum next 3 4 days it will keep dropping. Right? In the same way, let us look at AMD. So this indicator is telling that okay, AMD will drop soon. Right? It is telling that you can do a bear call spread for next month expiry. And you can see that right, BCS stands for bear call spread. And you can see there are nearly 28 million sellers here. Price pulse is telling it will drop. And this biweekly spread is telling it will drop. So 27.56 million sellers. So if I go and do a bear calls here, right? That means I sell 154, I buy 158 call. I keep some 300 $400 for August expiry, August monthly contracts expiry. Then if price stays below that, then all that money will be ours, right? Maybe tomorrow, day after, it will go touch this, and then I will see a big drop with AMD. Then let's take some, right? What do you think can happen with Zoom, right? You got a bear call spread here. There are 5 million sellers here, 4 million sellers here, 1.7 million sellers here, 2.9 sellers here. So there is a high possibility for it to go minimum till $69. If it breaks that, it can go all the way to $65. So if you do a bear call spread above this, you can keep all the money, right? Minimum for next 4 5 days, we'll see a big drop with Zoom, right? If you see mRNA. So when do you think we can do a bear call spread on mRNA, or where we can buy puts for mRNA, right? Around which price do you think is a good one? Yeah, around 38, 39. You can see around 10 million cell blocks, 17 million cell blocks, 22 million cell blocks, and T5 went all the way to the top, right? It is overbought now. In the same way, right here, it shows there is a huge cell block here, right? If I go and check my T55, this shows that price went all the way to the top, and we can see the dots here. That means at any point of time, we can see a major. So now if you go and do, right, whenever price comes close to this $38, if I do a bear call spread for August 18th, or right for next month expiry, around this price, right? I sell 40 call, I buy 44 or 45 call, collect some 400, $500 premium. Then there is very high possibility it will go here, either touch this or touch this, and then there will be a major drop with mRNA. So now your price pulse is telling it is very close for a big drop. Your futures level is telling there is a huge sell block here. Your T5 is telling it is close to the overbought area. Your T55 is telling it is all the way at the top. So there might be a huge drop in mRNA in the coming week, or maximum in next 2 weeks. We will see minimum $5 6 drop with mRNA. Like that, right? Adobe, right? If you see Adobe, same thing, right? It started dropping. So we got a, right. It is telling you can do the bear call spreads here. It all right here. It came all the way to the top, started dropping, dropping, dropping. So where do you think it can, right? It can come all the way to around $330. So like that, this indicator will help you. You whenever you get this bear call spread, you look for the confluence. You see, oh, in T55 I got here, and I see major sellers here. Right? You are not just going with one signal, right? This indicator biweekly spreads is telling you can take a bear call here. But if T55 also gives a confluence, your price pulse also gives a confluence, or your level manager also gives a confluence, then we can do the bear calls. You can keep all right. You don't need to keep watching the chart. All you need is 5 minutes to take the trade. Right? It will come all the way till this point where there are buyers. Right? 330 is the possible support for Adobe where it will reverse back. Again, whenever it comes here, we can do the bull put spreads. So what do you think can happen to BA? Right? It went all the way to the top. There can be a major drop. Right? Here we can see that level manager is telling it is at a major resistance. And we got up this biweekly spreads is telling it will drop. T5 is close to the top. Maybe next 1 or 2 days it will start dropping. But in price pulse, we don't see any major. We see that it is at a premium zone, but we don't see any major cells, so we can ignore it. If you don't see any major cell block, we can ignore. As of now, we got a huge buy block here. There might be a reversal, but still we don't have a confirmation, so we can wait on the BA. Let's go to, If you see Octa, here you can see. Oh, it is telling Octa you can do a bull put spread. So if you see here, right, this came all the way to the bottom. This we have a huge buy blocks here. So whenever we see a green candle, we can do bull put spreads with Octa. So like that. So basically, if you are a scalper, you can use futures level, stocks level, or price pulse on 5 minutes, and you can do the trades. You are more of a trader who don't have a lot of time. You don't want to do scalping. Then you have indicators like biweekly spread, where you wait in the daily time frame and you take the confluence with T55 or T5 or price pulse. And whenever you see that it went all the way to the top or all the way to the bottom, or right, you want to just do earning trades, right? Whenever just before few minutes before the earnings, you can look at OEQBK is at the top. This is at the top. This is at the top, and I see that there are a lot of big companies are trying to sell it. So like that, based on your time, based on your right, if you are not able to scalp or make money with prop accounts, you can do this type of trading. You can make money. If you have time and you can focus, you can do day trades, scalping. Then you use the futures level, stocks level manager, or use price pulse. Wait for a discount zone to go long. Wait for a premium zone to go short, along with the confluence of others. So like that. So all we need is taking time to learn, understand, and then if you follow, then you can make nice gains. So right again, tomorrow you can see, right, tomorrow you can see EQBK will have a major drop. SLP will have a major bounce. Yet again, we don't want to, right, risk, right? There is no indicator, no strategy which will make 100% of the time. So that's why always maintain a consistent position size. Don't go all in with one trade. Right? Always there can be some factors which can impact. So right, suddenly there might be a news or some bad news or good news which can change. But 85% of the time we will win. The 10 to 15% of the time, always there can be something which can go against our direction. But 8 out of 10 trades will make nice profits. So that's why we need to maintain a consistent position size. So if you have a $30,000, use $1,000 on every trade. If you buy calls, buy such a way that your overall investment is $1,000. If you want to buy puts, you buy some 5 puts or 10 puts so that your investment is $1,000. If you want to do bear call spread, right, for example, you want to do bear call between you want to right sell 45 or you want to sell 43 by 46 call. That means $300 is your risk. You may be collecting $200 as a premium. Then $100 is your risk. You can do 10 contracts, right? If the what is the spread difference, you count that and see how much premium you are collecting. If you are collecting $100 for a 3 point spread, if you are collecting $100, then you buy 5 contracts like that. So if it drops, then all that money is yours. In that way, if you use a consistent position size, you will be overall at the end of the week, end of the month, you will be making nice profits. So yeah, that's what, right. I wanted to explain about each indicator, how to use them, well, right? How to use. You can use for earnings, you can use for swing trading, you can use for long-term trading, you can use for day trading, you can use for scalping, you can use for futures, you can use for stocks, you can use for options. It's all about you have to understand whether you can take the trades quickly on time, enter or exit, or if you are more of a new trader, you start with day trading or swing trading, positional trading, and as you gain more and more experience, you can go for scalping. Right? If you are a new trader, mainly wait for those. Right? Whenever you have a big buy order block, take long position there. Or whenever you have a major sell order block, take a short position there. Right? Don't enter somewhere in between. So, so basically this T5 that is called as a score. These numbers are like score. So if the score is close to minus 100, that means it is good for a buy. If the close is score is close to plus 100, that is good for a sell. The range is minus 100 to plus 100. These numbers are the scores. So generally, if it is around minus 90, minus 95, then it will go up. If it is plus 85, plus 90, 95, it will go down. Yeah, Nvidia is still looking bullish as of now. It is overbought, but as of now, still we don't see any major sellers. So unless we see that right, it is at a premium zone, it is overbought. But still, once we see some major sellers, then we can think about the shorts. Otherwise, it is better we wait for the proper confidence. Tesla is going up, right? It came all the way to the bottom, started moving up. So it may go until 330, 340, unless there is any major fight between Elon and Trump. As of now, it is looking bullish. MSTR is still bullish. So if it, yeah, it seems 520. There are some sellers, but if it breaks it, then it can go all the way to 520 to $530. As of now, there is no, this is still bullish, right? If you see here, still there is a lot of gap to the top, right? It came all the way to the top here, drop. Then we got a buy signal, started going up. Here it came to the bottom, it started going up. So still you don't see the dots here. It did not go to the top. Here there are some sellers, but buyers are in full control. As of now, we don't, right? Here you have huge buyers, 10 million buyers. Here you got 22 million buyers. Here you got 13 million buyers. So, yeah, there are some sellers, but if we don't see a reversal tomorrow, then if we see that these buyers may break this resistance and go all the way till $520. Yeah, right. AMD, we are expecting a drop in coming week. So that's what we need to wait for the reversal candle, right? As of now, we have a major sell block here. It is at the top now. But this one is still at the bottom. So yeah, if we touch this and then we see a red candle, then it will drop. Otherwise, it may break it. So we have to still wait. Yeah, yeah, there are some sellers here. Here we got a overbought and then it dropped from 146 to 134. Now again it is going up. So once we get a right, if we get a nice bearish candle, then we can take the bear calls for AMD. As of now, it is still bullish. Right? We need to wait for the reversal candle, right? Because always resistance can be broken. So that's why we have to wait for a confirmation before we take the trade. Yeah, that's it, everyone. So
Right, this session will help you to understand all the major indicators, price, pulse, stocks level, futures level, T55, T5, then how to use biweekly spreads. Yeah, you can use this based on, right, if you want to mainly trade on prop firms, then price pulse, stocks level, futures level, and then T55, T5, these are the best five. You are more of a swing trader, then price pulse, biweekly spreads, T55, T5, those indicators will be very helpful. So you have to understand, right, which type of trading you want to do. If you don't have a lot of time, you cannot enter, exit on time. You want to do stocks, options, right, or options for swing trades. Then you can get these indicators like price pulse, biweekly spreads, stocks level, T55, T5. If you are a day trader, scalper, you have more time to take trades, then definitely futures level, stocks level, then price pulse, T55, T5. They are the best ones. So yeah, once you watch this video, right, you can see, right, we are making 85 to 90% with SPX trades and with earning trades. You will see, all right, I'm giving all these examples. Next 1 2 days, you will see that whatever we discussed, they will happen. Today we are expecting, or next 1 2 weeks, we are expecting a major drop with ES in Q, and then we are expecting a major EQBK will see a major drop. SLP will see a major bounce, and then banking are still, yeah, looking. We have to wait for some more time. We don't see major sell blocks with all the banking, but they are overbought. But still, there is no major confirmation. Yeah, sure, everyone. So scalping, definitely your futures level, stocks level, price pulse, they are the best ones. Round, as I told you, it can go all the way to this $452 is the minimum. So it is at the overbought level. It can drop until 450. Yeah, 450 is the best time to enter. Yeah, I'll share the recording in some time. We can do bear calls. Yeah, we can do bear calls on crowd tomorrow. We can do anything above 480, 485 bear calls. We can do. We'll say minimum 20 point drop in next 2 3 days or next 1 week. We can do bear calls for um, August expiry. We can collect some nice premiums, and then once we see a drop, minimum it will drop until here. Yeah, earnings are in September, so yeah, we can do August expiry. Yeah. Okay, everyone, have a nice weekend, and we'll talk again tomorrow in the live session.